Hello, good evening everyone. Welcome to our show After Hours with Bereez. Let's see what Banknifty did today. As I've always mentioned, how I love hammers, okay? And if you know where to find hammers, there is one such hammer that you can see here, right? And it formed at the top at 80H. And hammers that form on 80H or near swing highs or your resistance levels are something that you should always keep an eye on. And in fact, now if I go to explain, I can tell you why this particular hammer is really very important for me. Is if you see it opened, it tried to go up, and when you see it in a point of buyers, a lot of them got trapped here, and the closing was just brutal. When it closes below the opening price, it has a lot of significance. And after that, I was able to capture the down move. No doubt, the major trend is bearish, but now this hammer, this inverted hammer, does show that there's some kind of supply. So now what we can do is, because now we see a second hammer happening at support. And now this really causes me also to get a little confused. But as they say, trend is your friend. So now that the major trend is still up, what we can do is only go long if Bank Nifty crosses 43,100. Let's keep a buffer so that it's a psychological number also. And also any dip towards the mark levels is also a buy. So let's not short here. I would short, when if the market from here comes, makes a double top and break this level. That is something we could say a top is formed, or a retracement can happen. But for now, as the major trend is still up, let's keep the bias to buy on the dips. The levels are marked. I am waiting for one particular level, which is the 42,250 levels. I don't know. I really don't know if it's gonna retrace till here, but yeah, if it does, I would surely long. That's my setup in Bank Nifty. Let's go to Nifty. Now in Nifty, we've still not crossed 80H, and this is a double top in an intraday level on an intraday time frame. This is a double top. If this gets taken out, then surely we are seeing the 16,000, 18,600 levels. Here again, as I told you yesterday in the video, I would look for longs. This level will play out, and it did. And the bias is still the same. It's buy on dips, no shorting for now. Now moving on to stocks, I had mentioned about IEX, and we've been mentioning about IEX for a long time now. And now what I see in an hourly is that this now range has been broken. And if you have some basic concepts of supply demand, this is a very very good zone to accumulate. Any retest at this level, I will go long. And for further confirmation, I would also add on to my positions once the price closes above the 152 or the 153 levels. I would pyramid, not average it. So that's the trade plan I have kept ready in IEX. Let's see which one we had given yesterday. I think IEX and
Apollo Hospital.
Apollo Hospital, yes.
Apollo Hospital.
And
Yeah.
Infosys also we need to cover.
Yeah.
Apollo Hospital. Now again, this for me is now basing candles can work in two ways. This is not exactly a basing candle, but if the high gets broken and it closes above, then we can conclude that this is a basing candle, and then this can act as a demand zone. For now, it's again broken the hand, managed to close below. Still, the trade is valid. The structure has not changed. Look to buy. I would look to buy like near the 4600 levels, and it would be a half size, not a full size, and I would wait for it to break highs. That's the trade plan in Apollo Hospitals. And one more, which is IT is looking good, and in that Infosys has made again the similar pattern which I keep seeing is you get a breakout candle, and after a breakout candle, whenever time passes, I call this the mother candle, as this is the one which gave breakout, right? And if the other candle, majority of it spends its time in between the mother candle, the chances are high the next time you see a continuation. This is also called a continuation pattern. In technical analysis, you can call a single candle a lot of names. Just keep it simple, guys. Just see a breakout candle, you see it being in that range. Next day, keep it in your watch list. That's it. That's how you should go about it. So Infosys is in radar. From me, I think these three stocks that I'm gonna track. Anything that you have, Gandhar?
I'm not actively tracking anything. I just want to bring attention of our viewers to one interesting stock. Well, two actually. One is Power Finance Corp, PFC. And for the past two trading sessions, the
Whoa.
stock has given really, really sharp move. In fact, from the 100 levels, it has rocketed quite
Oh, that's
sharply
yeah,
upwards. And 30% kind of return for a PSU stock is actually 3 years or 4 years of dividend yield. So in that way, uh, if someone had accumulated PFC or even REC for that matter, both stocks are kind of synonymous with one another in terms of market movement. But I remember when it was around 100, the dividend yield on these stocks were upward of 4.5-5%. So if anyone had purchased it at that time, they would have had gotten a really good dividend yield for the future, as well as a good price movement as well, which
yeah.
they could
Appreciation
they
in the
could just hold
capital.
on to. Yeah. So just something interesting that I saw. But of course, there is one. There, I always hesitate to put heavy capital in PSU stocks because, well, you never know when government decides to
Yeah.
announce something that, and it's not always very clear how it will affect the stock price movements as well. So that's pretty much the reason why I did not buy it at near 100. Otherwise, uh, of course, in hindsight, everyone is the best trader in the world.
Yes.
So a little regret, but not so much
But yeah,
really.
if you leave, like if you only talk the technical aspect and if you leave what sector it is from and if you just don't even see what company it is, I would still buy the retest and keep my stop loss and just see if the trade works out as a purely technical view, nothing else.
Yeah. Because what when many people don't realize is as the stock falls, the dividend yield also falls with it, but still you get about 4, 5, 6% of dividend yield. So that kind of buffers your stock price correction. So that's why even people used to prefer to invest in ITC as well, because the correction in stock price was largely buffered by a good dividend yield. Similar the case for many mining stocks as well. So that's something about dividends. Reliance, I have a feeling might break out sometime
Yes.
in the near future. Uh, yeah, this is one sort of trend line that's on weekly time frame,
Yeah.
and it has taken a retest of 2,550 sort of zone.
Yeah.
So if now Reliance continues its up move, we can very well see index breaking its all-time high.
Yes.
If I'm not wrong, Reliance makes up almost 10 percentage points of Nifty. So it can very easily drive the market up.
Now that is coming here, I think 2700 is on the cards. There's a gap here, and I think
Hmm.
now it's high probability that it might get filled.
Yes.
Yeah, we can keep this
So
in rate. Like it's already, I think it's already made the move today. I guess. Yeah.
yes, it's a very good pattern of reversing the trend as well, where it
Yeah.
took support near 2,400, 350 sort of level.
Yeah.
It moved up, then it broke that one trend line, then it again took support from the similar level where the trend line was broken. So now there is a good chance the move will continue. This is
Yes.
the kind of patterns trend following traders look for.
Yeah.
Though, yeah. So if someone likes those kind of patterns, you can take a look at Reliance as well. It's for my watch list pretty much.
Yes.
Yeah, that's my watch list.
Yeah. I think today let's wrap it up then.
Yeah, sure. Let me thank our viewers for tuning in. Uh, Links to all our socials you can find in the description of this video. Make sure you subscribe to this channel and like this and all the previous videos that you have watched, and share it with your friends and those who are interested in the world of stock market. Thanks for watching.
Thank you.